Good afternoon to our friends from the media. We have with us at this moment, again, Finance Undersecretary Gil Beltran and Dr. Julius Parreñas of the APEC Business Advisory Council. Again, ABAC is a body or under APEC that is composed of leaders from the business sector, and they provide inputs to policymakers on matters concerning the business sector. So this morning, they discussed the meeting was composed of finance and the central bank deputies of APEC member economies. So Usec Gil Beltran will give us some highlights of the meeting, and Dr. Parreñas will give some insights to the discussions as a representative of ABAC.
In the meeting today, the deputies, central bank and finance deputies discussed the global economic developments, and they noted that growth is still there, 3.5% expected this year, and which is expected to rise to 3.7% next year. But they noted that there was a slowdown in investments, which explains why there's needs for some effort on the part of the member economies to do some more structural reforms, improve on their policies so that their economies will strengthen, and so that investor confidence will be restored. Also, they noted in the meeting this morning, they noted the need for structural reforms, which is what APEC is all about. We are pushing for reforms that will make the economies more financially integrated, and financial integration means getting the low-income households and MSMEs. We call them micro, small, medium enterprises, to be integrated into the financial sector, to the financial system of the countries, and eventually we'll come out with programs that will integrate further these these low-income households and MSMEs into the world economy, so that they can expand, they can grow, create more employment, etc., etc. Also this afternoon, we discussed fiscal transparency, the open data initiative, in which the Philippines is one of the major countries that that joined the program. Open government partnership, the Philippines is one also, the major participants. And this means developing outlets for data, for fiscal data, so that all of us, citizens, taxpayers, businessmen, will be able to look at all this information and decide for ourselves what kind of businesses we'd like to have, what kind of leaders we would like to choose, things like that. And to make sure also that the money that we pay as taxes are used in very important projects. So starting, I think it started this year, we have been putting up more data on revenues, expenditures, and borrowing in the websites of government offices. Also, all government departments now include data on their budget, their projects, their goals and objectives, and if they don't meet those objectives, they will lose their PBB. That means this is not Pinoy Big Brother, the performance-based bonus. They have to spend at least 90% of what is budgeted for them, and they have to achieve the objectives that they have chosen as their goal for the year. In our case, our goal is tax effort. So if you look at our website, you will see there our target for the year, and we should at least achieve 90% of that, or else we are not given PBB. So these transparency measures are intended to make sure that taxes are collected, taxes are put in the right projects, and that the agencies that implement these projects attain the objectives for which they have been mandated under the law.
Okay.
That's in general what was discussed today.
Okay, just to for a better appreciation of everyone, the fiscal transparency that Usec Gil Beltran has just talked about is one of the 4 pillars of the Cebu Action Plan. The Cebu Action Plan is a roadmap a development roadmap that the Philippines is pushing, and which the Philippines has proposed for APEC member economies to adopt. And those pillars, there are several measures to achieve. There are several proposed measures to achieve those pillars, and the government or the Philippines is proposing that those pillars and measures under those pillars be implemented so that we can achieve our development goals for the medium to long term. So now, may I give the floor to Dr. Parreñas to give his insights as representative of the ABAC.
Well, thank you very much, and good afternoon or good evening to all of you. As you know, ABAC or APEC is very unique among all the international organizations, including G20 or ASEAN, because APEC is the only international organization where there is a structure for private sector participation in its processes. And that structure in APEC is called the APEC Business Advisory Council. The council advises the leaders, the ministers, and the officials. And we have a seat in the table during the meeting of these ministers. And so I'm representing ABAC in this meeting of the Deputy Finance Ministers and Deputy Central Bank Governors. Although ABAC is composed only of businessmen from 63 companies from 21 APEC member economies, so 3 companies from each member economies, we have a big network because we involve the wider business sector. In the case of finance, we have about 150 institutions who are participating in the what we call the Asia Pacific Financial Forum. This is a forum that focuses on developing financial markets, capital markets, and services. We have 70 private sector experts from companies who are very active in infrastructure in the region who are participating in the Asia Pacific Infrastructure Partnership, which is focused on infrastructure. And we have another platform called the Asia Pacific Financial Inclusion Forum, which focuses on developing microfinance, developing access to finance for small and medium enterprises. Yesterday, we finished our 2-day forum, our 2-day conference, and we had about 150 participants from private sector, multilateral institutions, and public sector. I just wanted to highlight that the private sector is very supportive of the Cebu Action Plan because we have had a lot of discussions. What are really the important things for our region, and where the private sector can help in providing advice to governments? How do we design policies, regulations, legal frameworks that would effectively enable the private sector to contribute to economic development? Let me just highlight some of the areas under the Cebu Action Plan which we think are really very important for the development of the region. The first one is with regard to financial inclusion and the financing of small and medium enterprises. I think Undersecretary Beltran has already mentioned that this is an issue that is foremost in the minds of many policymakers in the region. And this is also why the Philippines this year has highlighted inclusive growth as one of its as its main thrust. A second issue that is very important to the private sector is how do you promote investment in infrastructure, especially promoting long-term investment in infrastructure. And that's important because infrastructure, this is an asset that has a life of 20 years or more, but we don't have enough long-term financing for that because most of the region really depends on the banking sector, and banks, of course, can fund very short-term or medium-term activities and investment opportunities. But there you need the insurance companies and the pension funds to really develop and to invest in infrastructure. And then the third, of course, is the development of capital markets. Why are capital markets important? First of all, the lesson of the Asian financial crisis. Our region is very much dependent, still very much dependent on the banking sector as a source of financing. But if you look at the more advanced markets, these markets are more diverse because you have the bond markets, the debt markets, and then you have the equity markets. So that if there is a crisis in one of them, then the others can step in to provide the financing and keep the economy going. That's one. And the second also is that it provides competition among financial service providers. And because capital markets, especially local currency bond markets, are very important for long-term financing. This is where the insurance companies and pension funds park their money in order to invest in long-term projects like infrastructure. So let me stop here, and if you have any questions, what are the things that we're doing in each of these areas, I'd be very happy to answer.
Okay, for those who want to ask question, you can just approach the mic, state your full name and your organization. Okay.
Good afternoon, gentlemen. My name is Dario Agnote. I write for Kyodo News, Japanese news agency. To Usec Beltran, can you please elaborate a little bit on the CAP? What new inputs did you get from the member economies during this particular meeting? And I was wondering, because you mentioned already some of the elements, and where are we now in the drafting, or has there been already a consensus among yourselves on the content of the CAP? Thank you.
Actually, I presented the CAP. We call it CAP, the Cebu Action Plan, this morning. And based on the comments around the table, there was support for many of the items in the agenda. And also there were, we had with us the multilaterals which are conducting the studies and which are providing the expertise for many of these activities, and there was also support from them. So in general, there's support for many of the items in the Cebu Action Plan.
Finally, to be finalized?
Actually, many of the countries now have projects that that are in line with the goal and the initiatives mentioned in the Cebu Action Plan. They have already started. In our case, we are one of the proponents of the Open Data Initiative, for instance. We have done it. It's already there. What we just have to do is to put more information for the public. Mm-hmm. And for many of the economists also to look at what we have done and see whether they can also do this for their own countries.
Okay, thank you.
And just for our friend from Kyodo's information, the inputs from the Cebu Action Plan, while it's still being gathered, and although some economies are already implementing some of the measures, the formal launch of the Cebu Action Plan will be in September. And then that is the place where the finance ministers will be discussing and launching the Cebu Action Plan formally. Next question. Okay, Ben. Your full name and your organization, although I know you, just for documentation.
All right. Thank you, Mitch. Good afternoon, Mr. Usec Beltran and Mr. Parreñas. I have a question each for both of you. For Usec Gil, you mentioned structural reforms. Can you elaborate what exactly are these reforms you're eyeing, and can we implement this across all members? Or can we mandate that they implement these reforms? And then for Mr. Parreñas, you mentioned that the private sector, ABAC, is very supportive of the Cebu Action Plan, but are there any concrete or specific actions that private businesses have in mind so that they can help push forward this roadmap? Thank you.
Structural reforms are really measures that countries adopt to make their economies more efficient, that will generate more economic activity. That's in general. And many of the activities in the plan, for instance, number one, setting up credit information bureaus. This will allow the lenders to know more about potential borrowers who are not yet included in the, who are still excluded from the system. For instance, a small SME in a faraway province in Tarlac, for instance, won't be able to get financing because he has no credit rating. Nobody knows about him. But with a credit bureau, the possible lender will just look into the site to find out whether this potential borrower is a good one. He can trust the borrower. He knows what industry he is in, how many loans he has made in the past, if he has done so, or the payment history, credit repayment history. For instance, there may be also data there on the utility payments, for instance. That's alternative information, because in many cases, these institutions don't have, these borrowers don't have financial statements. So in many cases, some of the data that may be necessary to make these small enterprises known is through alternative data, like for instance, utility payments or cell phone payments. How much cell phone messages they do, how much do they pay, for instance, Globe or Smart, things like that. The borrower will be able to know if this, the lender will be able to know if this borrower can be trusted, what kind of activities he is in, how big his operations are. These things are very important for a lender. And if this small entrepreneur is able to get some funds to expand his business, then that will be creating a lot of employment, that will generate economic activity in the communities where they are located.
Sir, just a quick follow-up before Mr. Parreñas answers my question. Is there any timetable wherein you want to hit your targets or go like, I mean, maybe the next decade, in the next 10 years or so, for financial inclusion? And for the Cebu Action Plan, is there any timetable for that you want to roll out all the projects? Or
Actually, if you look at the Cebu Action Plan as it is formulated right now, we want by 2020 to have all the economies as having credit information bureaus.
Okay.
About 20 of them. That's the long-term objective. Right now, there are 7 countries, member economies with the credit information bureaus. We want to expand that to about 15 by 20, after 10 years. No, 2020, and then by 2025, all of them.
all right.
That's the long-term objective.
Okay. Well, we have actually 12 action plans that we have identified in the private sector. And these are action plans addressing very narrow but very significant bottlenecks to the development of financial systems. And we have chosen these 12 issues that can be progressed and can yield some tangible results within 3 or 4 years.
Can you discuss them, or maybe the
Yes.
topmost or the most?
I will give you some examples. So I think Undersecretary Beltran already mentioned about the credit information systems. Let me also talk about the other part of SME finance, which is the secured transactions framework. One of the problems of SMEs in the region is that, especially the medium enterprises, is that many of them do not have real estate collateral. And in many cases, if you don't have real estate collateral, you cannot get loans from the bank. What we are trying to do is actually to get all of these experiences in countries which have been able to successfully initiate legal reforms that will allow the use of movables as collateral, which is very important for SMEs. But this is not very simple, because you actually need in the law, when you make the law, you actually need to create a whole operational infrastructure for that to work. So you're talking about the legal system that will allow movables to be used, but you're also talking about the setting up of collateral registries that are easily searchable, and which are like what the Australians have. You can register your collateral on the internet, and if you're a lender, you can check the collateral on the internet. And a consistent system, because in many cases, even in advanced economies like Japan, for example, they have a system where it's called the perfection system, where you can register your collateral, but when the company goes into bankruptcy, then there are another set of people who have more senior claims to that collateral than you have. When you have a system like that, lenders, of course, are very hesitant, so they charge a high risk premium for small and medium enterprise, or they don't lend at all. So we are looking at the best practices that are in already there, and to share these experiences with Asian, especially developing Asian economies, which have expressed their interest in initiating reforms in this area. For example, Vietnam is initiating reforms in this area, and we are providing advice, not just the private sector, but together with experts from multilateral institutions like, for example, the International Finance Corporation, which have experts that have been working on these issues for many years. It's just one example. Another issue that is important for small and medium enterprises, trade and supply chain finance. That one of the there are two sets of issues that we are dealing with. One is regulatory issues that make it expensive, raise the costs, and limit the availability of trade financing for small and medium enterprises. I mean, multinationals don't have a problem because they can deal with this, but small and medium enterprises have a problem. These are, for example, Basel III requirements on capital and liquidity. You're talking about how the implementation of Know Your Customer, CDD, anti-money laundering rules, and of course, the secured transaction system that I was talking about that affects how you use warehouse receipts, for example, inventories as collateral. There is a lot of things that regulators in the region can do, because it depends on how they implement these rules that will affect, for example, the availability and cost of trade finance. In Europe, for example, what they've done is they're applying Basel II. I mean, the regulators have decided to apply Basel II for trade finance instead of Basel III because it treats trade finance in the way that it should be treated, which is it's not really risky compared to other loans. So the question is, how would regulators in the region implement Basel rules for trade finance? And then, so that's one part. But the other part is there are new innovations that are coming, into the market, which could really reduce the costs of capital, of working capital for small and medium enterprises. Just an example, one of them is, this trade settlement mechanism called bank payment obligations that, has been implemented. It's being done by some banks and suppliers and buyers. But there's very little awareness of this, so the issue is how do you promote awareness? Electronic platforms for supply chain finance, e-commerce platforms. Issue here is how do you develop the regulatory structures that would make it safe and would make these platforms function efficiently? And then for those countries which are trading with China, China makes up about 50% of imports in the Asia Pacific. How can you use, for example, the renminbi as a trade settlement currency, which again will also lower the costs of trade and supply chain finance? Well, we have 12 initiatives, so I could spend probably the whole day to explain them to you, and these are all very complicated
But
things.
definitely the finance and central bank officials are open to the ideas of the private sector. Right?
Yes, very much. In fact, last year, because we've discussed, we submitted a report to the finance ministers last year. It's called the Interim Report of the Asia Pacific Financial Forum. So you can Google it on the internet and you can find it there. So we've discussed all of these things in detail, and the finance ministers actually endorsed the report. And if you read last year's finance minister's statement, there's one paragraph there which says that they encourage the relevant authorities in APEC member economies to work with the private sector through the APFF to get these things done.
All right, sir. Thank you, sir.
Who wants to ask the next question? Your full name and your organization, please.
Hi, Vitas Lopez from Bloomberg. Usec Beltran, based on your discussions, what worries officials the most?
What worries them the most?
What do they find most challenging in the economic, in the big economic picture?
Actually, the main issue that concerns them is how to make their economies grow as fast as before the global financial crisis. Before the global financial crisis, countries are growing very fast, 4%, 5%. But after that, it went down and it's about to recover again. But some countries are still in the low growth level, like for instance Europe and Japan, and there's what we call divergent monetary policies being practiced. For instance, in the U.S., they're trying to normalize their monetary policies, adjusting interest rates to higher levels. But in Europe and Japan, for instance, they are loosening up because they want to revive growth. So these two contradicting monetary stances may result in some volatility in the financial markets. This is what is worrying them. How to adjust your policies that you are able to avoid or emerge from a more volatile financial situation. And in the meeting this morning, they said that the best antidote for volatility is really structural reforms. Adopting measures that will make your economy grow faster, enhancing efficiency in the markets and in production processes, getting some sectors which are not able to get financing so that they will be able to finance their businesses. These are the things that will make investors think twice before leaving a country. If your economy is growing, your private sector is showing some resiliency and good growth, then the funds will stay. Because basically, the Asia-Pacific region is the fastest growing region in the world. So, and many of our countries, member economies have a high savings rate. So there's a lot of of savings that could be used to revive growth. And this could be done if we can use these investable funds, for instance, for infrastructure, which is very important for the growth of an economy, and for businesses that are excluded from the system, like low-income households and SMEs. MSMEs, yeah. Micro, small, and medium enterprises.
And speaking of infrastructure, have there been agreements on how the region can close the gap? I understand the Asia-Pacific region needs $750 billion a year for the next 10 years in infrastructure investment. So what action will be done to address that need?
That will still be discussed tomorrow. The Pillar 4
Pillar 4.
will be discussed tomorrow.
Okay.
The
Thank you,
fourth
sir.
pillar of the Cebu Action Plan is infrastructure development and financing. And tomorrow, perhaps you can ask Usec Gil in the closing press conference about the discussions on proposals for
Tomorrow we will
infrastructure
tell you
development.
what happened during the meeting.
Sir, thank you.
Okay, any more questions? Okay, Mika?
Good evening. Usec Gil, in your opening statement a while ago, you mentioned that the forecast for the growth of the Asia-Pacific region this year is 3.5% and 3.7% next year. May we know, sir, the basis for that forecast and what are the drivers and the risk that you factored into your projection?
That came from the IMF. They presented their assessment of the world economy. And basically, the IMF and the World Bank have almost the same projections on how the economy will move. And it's very difficult to identify which are the growth drivers because there are so many countries in the world. But for the Philippines, I can tell you.
Sige, sir.
BPOs.
For the Philippines.
Our manufacturing sector is recovering quite personally. We have never seen 7%, 8% growth for a long time. We also have remittances. Personal remittances amounted to about 27 billion last year, and we expect the growth to continue, about 5% again for this year. Also, what are the others? Exports of services, the BPOs, they're growing quite nicely. The industry expects 20 billion earnings this year. Also, what else? We are recovering also from the typhoons last year. So, barring any major typhoon this year, the agricultural sector will recover. So, our growth drivers are so numerous for the Philippines. And even for fiscal spending, for instance, we did not spend much last year. So emerging from a low base, it's very easy to grow fast. We have much fiscal space this year. Last year, the deficit was very low. We don't have the whole year figures yet, but as of November, our deficit was 0.3% of GDP, and we planned 2%. So if we can only spend that 1.7%, add it to the growth last year, and you have, do you have? 6.1 plus 1.7? That's 7.8. Sayang, no? Which means there's a lot of growth drivers for the Philippines.
Thank you, sir.
Any more questions? Okay.
I'm Ditas Martin. I'm from the Investor Relations Office. My question is for Mr. Parreñas. We understand that ABAC is helping or is organizing the Business Leaders Summit, which will take place in November. Can you give us some background information on that? Who do you expect to attend? What's the agenda? And how will the Philippines benefit from hosting that Leader Summit?
You're talking about the CEO Summit,
Yes,
right?
the CEO Summit.
I'm afraid I can't give you much detail because I'm not the one who's organizing that. That's Tony Tan of Jollibee is the chairman of that whole thing. So his staff is working on that.
Any more questions? Okay. Okay, so just for Usec Hill's closing, and of course for Dr. Parreñas' closing, let me throw this last question. Gentlemen, the Philippines has somewhat already proven that it is resilient because it has grown even at the height of the recent global crisis. But despite that, we are still pushing for a collaborative and regional effort such as the Cebu Action Plan. So why do you think it is important to collaborate? Why can't we just do it individually?
Because if economies coordinate and coordinate their actions and implement reforms on collectively, the economy of the world will be much better. And given a better international environment, it's easier for us to grow faster. Actually, during the middle of the crisis, we grew at 7.6%. That was in 2010. And we could have grown faster, even faster. The potential is there. If the international environment is less volatile, more countries are growing at 5-6%, then it's easier for us to achieve our targets. We could have actually created more employment if the world economy was much better.
Okay. Dr. Parreñas?
Yeah. Well, we're talking about the development of financial markets. The reality in Asia is that our markets are small and they are fragmented. You know that when there is scale, then the costs go down. There's more liquidity, there's depth in the market. That's why the US market is very liquid and very deep. And that is why it makes a lot of sense for savings in Asia to go to New York and then to come back to Asia to be invested in Asian assets, which is actually not really very efficient because what we want to do is to develop efficient financial markets so that the savings in Asia can be intermediated in those markets and go directly to fund Asian infrastructure, Asian corporate expansion, and whatever needs we have. But you need scale. Our markets are fragmented. We have different regulatory structures, and so you cannot really operate. You cannot really look at Asia as one market. What we're doing is trying to facilitate cross-border investment and trying to move towards, that greater financial market integration. And that's why APEC is very important, and that is why also private sector input is very important because these are the market players who are able to point out to governments what are the what are really the important things that will make the private sector invest cross-border across Asia. That is one of the projects that we have. The other issue, which I already hinted at, is infrastructure, and I think that also relates to an earlier question. Again, infrastructure is a very important need in Asia. Probably the Philippines right now doesn't have much problem in funding infrastructure. This is not the case with other countries like Indonesia, for example, because their banks are not able to lend beyond the tenor of 7 years. So they need long-term funding, and that's why they need funding from outside. So really, what we need to develop in Asia is a kind of market where there is a free flow of capital from countries which have a lot of them, and actually which are looking for investment opportunities. I mean, look at the pension funds in Japan, for example, in Taiwan, or in Korea and China. These are very big pension funds who are investing their money in low-yielding Japanese government bonds. But the pensioners in these countries would benefit more if these funds were invested in Asian infrastructure that will yield more, because they will finance growth. So there are many issues that need to be tackled if you want to achieve that kind of system. And this is what we're trying to do in APEC through, for example, the PPP centers and the PPP Experts Advisory Panel under the Finance Minister's process, whose task is to develop or to help governments understand how do they bring bankable projects into the market, projects that will really attract private sector funding. And then, how do we develop the long-term investor base, pension funds, insurance companies that are the natural investors in long-term infrastructure, and which are very important because we're all Philippines, maybe not yet, but soon will be aging societies. How do we fund our retirement, especially now that it takes longer and longer for people to die? So we will run out of money. So the question is, we need to develop the retirement income solutions, but at the same time, so that creates long-term liabilities, but we have to match those long-term liabilities with long-term assets, and we're talking of infrastructure, in order to both fund retirement and fund the development of infrastructure. So these are all actually very complicated things, but I think we've had a lot of discussions in the finance minister's process, and we think that Cebu Action Plan I think contains a lot of elements that would help advance these issues.
Okay, on that note, we are officially closing this press conference. Enjoy the rest of the evening, everyone. Thank you.